It's never a dull in the life of property and development and investment. And since the pandemic, we've had nothing but unrest and drama and wars and cost of living and interest rate hikes and inflation. And yet we're still here today, and many thriving around the table. So it's a good time at the start of the year to reflect on where we are, take stock, and have some predictions for the 12 months ahead.
I'm hearing a lot of conversations going on at the moment about taking a big haircut on these property portfolios to sell to wherever the money might be for such a volume of assets. And the numbers have been put at sort of between 60 and 180 billion pounds worth of real estate that would fall within this sort of bucket. And they would generally be sort of 10 to 20 million pound assets.
If we were going to develop a spec office building, then generally who the end investor is of that asset, whether it be a UK pension fund, German, sometimes further overseas, but those funds just are not there. So the viability challenge around new build development, certainly commercial offices, not residential, not logistics, but certainly offices, is probably at a level of challenge that I've certainly not seen since I left university in '97.
The big issue that the public sector needs to contribute into this is stability, and I think we can do that on two levels. PFE we've mentioned. I think that absolutely provides some certainty, not just on commercial but on resi allocations as well. And the second is the point about viability, because viability is the biggest conundrum that comes through the planning system for us, whether that's on residential schemes, whether it's on commercial schemes or otherwise.
So despite all the noise in the press about interest rates, which is something we've heard quite often, a lot of people don't know that despite the Bank of England base rate being at 5.25%, there's a very healthy appetite between the banks to lend. So there are buy-to-let mortgage options available for as little as 3.85%. So let's say the likes of Mortgage Works, to use an example, have just brought out a new buy-to-let rate at 3.64% at 75% loan to value. So for an investor, it's very appealing where you can acquire an asset in a major city with yields of 6 to 7%, where you're going to get long-term growth, and then you're heavily cash positive after all costs.
I think we'll see the emergence as well of some other subsectors to build to rent. I've heard quite a lot of talk recently about over 55s build to rent, and a number of market participants looking at either raising funding specifically for a strategy within that, also affordable, and how that interacts with build to rent. I think that's been something of a challenge of the last few years as build to rent has emerged. A lot of affordable tenures obviously require RPs to deliver it, but we're seeing a bit of a shift there. A lot of local authorities are now getting more comfortable with things like discounted market rent, and that's enabling affordable schemes to come forward that don't necessarily need a registered provider, that can be managed holistically by the same manager who's managing the open market.
Sasha Laudry and Andy Burnett reinstated the Nighttime Economy Panel, which is really diverse. I sat on that last week, and it's brilliant. They've brought together a really, really wide group of people, and the big conversation last week was about safety and about accessibility, which brings me to my second point, which I think restaurants and these kind of on-trade operators, it's the colour in the city, isn't it? It's what really, I've worked with enough developers and walked around enough sites to say the thing they talk about over and above everything else is and this is going to be this and that's going to be this, right? And imagine when everyone's sat outside having a beer, and it's the colour that kind of adds the end, isn't it? And it's wonderful.
I think the interaction between public and private sector and the longevity we get of working together is probably need for some more frameworks and to look at these in greater detail and make that work and drive it forward. PFE, without a doubt, the biggest one for Harworth as a business, but I think as well for Greater Manchester, it's great that it's effectively, hopefully, going to get there, what we think, Q2 this year.
Well, we hope to see continued demand from both national and international investors, mainly in Manchester. I think the fundamentals of the market are very, very strong. The rents have increased by 19% over the course of the last year alone, and house building has also fallen to the lowest level in 7 years. So I think in terms of the fundamentals for an investor to consider Manchester, it's very, very strong. So as long as we see relatively healthy mortgage interest rates, which are key. I think it's something that's set to continue.
I think there's going to be a lot of discussion this year and criticism of the planning system as a whole. It's often gets kicked about and as a scapegoat, I think, for a lot of the kind of problems in development as a whole. I don't think there needs to be a massive reform of the planning system. I think there just needs to be more local authority resource.